Hey guys, welcome back to the Patti Martin Real Estate Team YouTube channel. I'm joined with Patti Martin, and we're going to talk about your July 2023 market update. How you doing, Patti?
I'm well, Adam. How are you?
I'm doing well. We have some interesting numbers. So before we get into the numbers, I just want to kind of frame this as to where we are today. So policy interest rate hikes. We've had 10 hikes from March 2022 to July 2023. And right now we are sitting at 5%. A year ago, so June 2022, we were sitting at 1.5%, and July was the big hike at 1%. And then in September, it was 0.75. So we're completely different on interest rates from today compared to a year ago.
Yes.
But when we're looking at the market as a whole, it doesn't seem like interest rates have really affected all that much when we're just looking at the numbers, but we'll get into that because I think some numbers will tell us differently. So the board has come out and said that home prices across all types in Metro Vancouver they rose again in July. With sales in the region totaling 2,455, which is a 29% increase from July 2022.
Wow.
So it's considerable, but that was from a year ago. And if we look at sales in June 2023, so last month, sales actually dropped 18%. And if we look at sales in May 2023, sales actually dropped 28%. So in May 2023, they were 3,411. Are we seeing that in the market, Patti? What's your
Definitely.
opinion?
Yeah, definitely. You can see that there's a little bit more to look at and a little less heat to the market, even when we drop a new listing, unless it's an outlier, which has still been happening. There's definitely less showings, less interest. But, we do talk about this is the dead of summer. We're in the first week of August. People are away. We've been very busy for a long time. So it will need a bit of time to see if this is going to stick.
Yeah, I was just going to say, it'll be interesting to see if it's like that summer lull or if we're just like getting right back into the swing of things for fall. But again, the interest rate today, with sales up 30%, like people are more likely to buy a house today when the interest rate is 5% than they were when interest rates were 2.5% and people were on the wait and see policy.
Yeah, I know. Crazy, right?
I know that interest rate has definitely pushed people out, but there's still that many more people that have come in getting ready to buy.
Yeah. And you see it because there's like people are, today I was talking to this couple and they've been looking for a year. I said to him, oh, you need to sell first because you have no motivation to buy because you haven't sold. And so you wouldn't even know what to do if something came up that was what you wanted because you haven't sold. But the hesitation was so interesting because it's obviously what other potential buyers / sellers are struggling with. They do not want to commit to the selling of their property, which keeps the inventory really low until they know they're going. And it's this vicious circle of nobody's going anywhere half the time. And yet we still have an active market.
It's interesting because it's always going to be the what do you do first, right? Do you buy first or do you sell first? And I think depending on the property type that you're upsizing or downsizing, whatever you're doing, there's going to be a better way to do it. But talk to your trusted real estate advisor. Our numbers are linked below in the description, and we can definitely help you out with whichever situation you're dealing with.
But you can see the quandary, but at the same time, as I told them, unless you kind of jump in the water, you're not going to go anywhere.
No, that's absolutely true.
It's a difficult decision, but somebody's got to make it. And one of the things I was pointing out was the slight increase in inventory and the slight decrease in the number of sales, which happened for the last 2 months. And so it seems to be that that's the direction we're going. And while there's still heat in the market, you might want to try to sell and look towards a couple of months down the road where maybe there's more to choose from. And
Yeah, maybe ask for that long completion.
Yeah.
And then it gives you a little bit more time to buy.
Yeah.
When we were talking about new inventory coming to market, there was 4,649 new listings across the MLS. That's all property types. This is up 17% from July 2022. And it's only 5.2% below the 10-year average. So listings coming to market is acting more normal compared to what is historical. Since June 2023, the new listings at that time that came to market was 5,348, so a 13% decrease in July. And when we look at May 2023, new listings that came online that month was 5,639, so a 17.5% drop.
Oh.
So we're seeing fewer new listings to market. There's only 4,649 that came live in June or in July.
That's a funny stat. So is it that some of those that came live in May and June didn't sell?
I don't have those numbers. Those numbers I don't have. So this is just tracking whatever is a brand new listing coming to market. So that one is a good question. Maybe we can follow up on that one. When we're looking at total number of listings on the MLS system, there was a 4% decrease since July 2022. So July 2023 at 10,301 listings total. July 2022, 10,734. This is 14.4% below the 10-year seasonal average. So historically, we're still low for inventory. Now, I found that this was actually quite interesting. In June 2023, we only had 9,990 listings. So we're actually up 3.1%. But from May 2023, when there was 9,300 listings in the MLS, we're actually up 11%. So new listings coming to market are slower. Total listings on the market are up 11% since May. So that tells me right there that listings are staying on the market for longer.
That's the answer. Yeah,
there you go.
Question. Yeah, that was good, Adam. Yeah. And you can see it with certain things. But again, there's these weird pockets where, we're still seeing multiple offers and we're still seeing a tremendous amount of interest, maybe not an offer, but at least the interest in the listings as they come to market. So it's funny.
Yeah, it definitely varies by property type. Like if you have a townhouse with a garage, 3 bedrooms up, 2.5 bath in Steveston, your competition is very low.
Mm-hmm.
You're going to have a lot of interest. Maybe not a ton of offers, but you're going to get the people through the door as long as you price it accordingly.
Yeah, I mean, I was looking in Steveston South today, 2 bedroom, 2 bath, under 900,000. There's one listing.
Yeah.
One listing.
Yeah, there's not much. There's not much.
Do you know how there are in that area?
Yeah. And that's where we're seeing, like, you're seeing low sales because maybe people want a particular area or whatever it is, but you are starting to see listings sit on the market. And then that brings us into sales to active listing ratio. And this tells you what the market's kind of trending the past few months. So the sales to active listing ratio for July 2023 for all property types was 24.9%. Okay. If I wanted to break that down for
seller's market.
Oh, yes. Anything above 20% is still a seller's market. So that's where we're trending. So when we break this down, if we're looking at detached homes, the sales to active listing ratio is 16.5%. For townhomes, it's 32%. And for condos, it's 30.6%. So the bulk of the market is buying townhomes and condos because detached is quite expensive. When we look at detached sales to active listing ratios for May, June, and July, okay, in May, it was 28.5%. June was 21%. July, 16.5%. Townhouses, May, 45%. June, 38.5%. July, 32%. And then apartments, In May was 45.5%, June 39.4%, and July 30.6%. So every property class is trending the same direction, sales to active listing ratios, and that's trending downwards.
Yeah.
So there's fewer sales for every active listing. So these homes are now sitting on the market longer. But prices are up. Yeah. And since May 2023, the benchmark price was 1.188 million. And today in July 2023, it's 1.211. So it's up 1.8586%.
Wow.
Since May.
So, yeah.
Right. So prices have been steadily increasing for the bulk of the year, despite higher interest rates, despite low inventory, despite, all these things. So this is where, when I read the stats, you have these numbers that are telling you, the market's trending a little bit softer, or it's balancing. We're getting into summer. But then you have the other factors that are supply and demand, which are more macroeconomic. And then you have immigration of coming into Canada. Like the Canadian government in the past 12, 13 months has let in 1.2 million people into the country. We need more of everything. Yeah. Right? And when we're only building housing at the rate of, let's average up and go at most 50, 60,000 units a year based on CMHC. And I'm averaging up. And we need to build about 100,000 units a year just to meet equilibrium.
Yeah.
That tells me where the market's going, irrespective of interest rate.
Right.
So I think that's a good amount of information that we have for our viewers and our listeners. Patti, we usually end our videos here with a little, if you were a seller or a buyer, any advice, any tips, any recommendations?
I'm still believing that we're going to slow down more, that we're going to see more inventory, that we're going to see less sales. I think that's where we're trending. I know it is summer. I worry that that's really just what's happening. And then I think, I don't know, because once you started reading off those stats from May, June, and July, it does feel like that's where we're going. And it's time. It's time, because the market sort of probably does need to settle down a bit. And we do need more inventory. When I can pull one listing out of an area that has at least 10 buildings of, many, many units. So I think that's where we're going. And I would tell sellers, I'd get on it.
Yeah, I think it's the same message that we've had before. Sellers, if you are thinking about selling the next 2 to 3 months, speed it up a little bit. Hopefully you can catch the market where there's fewer listings, like the 1 2-bedroom, 2-bath condo in all of Stevenson under 900,000. For buyers out there, I would be weary of waiting for an interest rate drop. I think you're playing with fire if you're waiting for an interest rate drop, because that increases everybody's affordability. And if we are still in a market where there's fewer than, let's just say, 12,000 listings, right now we're sitting at 10,000, you have low inventory, you're going to have more buyers coming to the market. So buyers, if you are ready to buy, do your best to negotiate a flexible mortgage. I'm not saying a fixed or a variable rate. I'm saying a flexible mortgage where after 2 years or 3 years, you have the ability to renegotiate, but do not pass up on the property. With the numbers that we're looking at, the immigration, the supply and demand issues, if you find a home that suits your needs, that's big enough for yourself or your growing family, get into it.
Yeah. I heard this the other day: buy the house and rent the rate. Yeah. So in other words, go short term, pay a little bit more. We're talking, the prediction is over and over that I hear is late 2024 that we'll start to see interest rates come down, not to what they were. We're not probably coming down to 2.5%.
No, you're probably living 3 to 4%.
Yeah, but that's what it. So rent the rate if the house you want is there, buy it, because it's easier to change your mortgage rate than to move.
Short-term pain, because it might be painful for the long-term
Yeah.
gain. So we'll see how it goes.
Yeah.
Patti, thank you so much for joining us on today's market update.
Thanks.
We'll see you next month.
Thank you.